This is a lesser known scheme. It's actually a scheme that I prefer. Essentially, you would typically buy a property, it's 30% discount of the market value. So it's saving you having to mortgage that extra 30%. Okay, so you're removing that hurdle. You will then own 100% of the property.
Welcome to this week's episode of the Mr MoneyJar show. This week we are joined by Dan Knott, the founder of Dan Does Mortgages. Dan is a mortgage broker and content creator, and today he's going to be speaking to us about how to get on the property ladder in 2024, which I know is a huge milestone for a lot of the people listening. Dan has a lot of experience and has dealt with many clients when it comes to having that initial conversation with them when they're trying to work out where they might want to live or the sort of house that they want to buy, all the way to applying for a mortgage and getting their deposit money together and handing over to solicitors and things like that. So when it comes to speaking about getting on the property ladder, there's fewer better people than Dan. So if this is a goal of yours or a dream of yours in 2024 and beyond, do make sure that you stick with us for this week's episode. Let's get into it. You're tuned into the Mr MoneyJar show. It's showtime. Dan, welcome.
Thank you very much for having me on. Very excited to have a good chat.
Yeah, thanks so much for joining. Getting on the property ladder is a milestone that a lot of people in this country are looking towards. And so I think it's great that you're here today to maybe dispel some myths, share some information, and make the process a lot simpler for people.
Yeah, so what I try to do, as you're aware, with Dan Does Mortgages, make advice accessible, digestible, hopefully enjoyable, primarily for first-time buyers, and hopefully simplify that process for them. So yeah, let's get stuck in.
Yeah, but before we do, could you just let us know who you are and what you do?
Yeah, so my name's Dan. I'm a mortgage advisor, known online as Dan Does Mortgages. I work primarily in the first-time buyer market, helping first-time buyers across the country to buy their first homes.
And what's the market looking like at the moment?
So it's, there's been big changes in the last few years, in 2020 and 2021, maybe the market was incredibly busy.
Okay.
We're seeing some of the lowest interest rates of all time. Now, over the course of last year, that changed. Interest rates were a lot higher. Property prices had shot up, in the last few years. So it's maybe been a quieter year in the last 12 months compared to the previous couple of years. However, over the last 3 months or so, we've seen consistent reductions in interest rates, and things are definitely starting to look a little bit brighter. There's more interest from buyers at the moment. I'm getting more telephone calls, and yeah, things are definitely looking a little bit brighter.
That's awesome, and hopefully we can help a lot of people get on the property ladder in 2024. And I think the last thing I'll ask before we go into the actual home buying process is, what's the job of a mortgage broker? What do people like you do?
So it's essentially my job to hold a home buyer's hand from an initial call right up until the day that they get their keys, okay? So taking them through that journey, minimizing stress, doing all of the legwork, and making sure that they will achieve mortgage and home buying success on time and first time. It's my job to make sure that my home buyers get the best possible mortgage solution for them. That's going to look different for everybody. But yeah, it's my job to guarantee that for them.
Okay. And having worked with a mortgage broker in the past, not yourself because it was before we'd met, but getting on the property ladder, that was one of the single most stress relieving things. Mm-hmm. It was literally, at points, it was just sending emails, and then the mortgage broker took care of everything. But great. My first question for you then is, how easy do you think it will be to get on the property ladder in 2024?
Depends who you are. It depends on what your circumstances are, what your goals are, and the location that you're looking to buy in. For some people, it's going to be very hard. Rates are a little bit higher than we would like. Property prices are a little bit higher than we would like, especially if you're buying in the more expensive areas. It's going to be pretty hard. However, it is possible. For some people, it's relatively easy if the circumstances and goals allow that. I work with people within all areas of that spectrum, either side of that and everywhere in the middle. But yeah, it depends on your circumstances, the position that you're in, your income. Have you got family support? Are you buying a loan with a partner? What your goals are? How expensive is the property you're looking to buy, for example? What sort of deposit size do you need? And as I say, yeah, location, property prices in London are going to be a lot more expensive than they are maybe in the northeast where I'm from. So that's definitely a factor that's going to impact it.
What are the first steps to getting on the property ladder? Let's pretend you're speaking to someone and they've literally taken no action whatsoever. What's the first thing, if they want to buy a house, what's the first thing that they should be looking to do?
So you're going to need, most people are going to need a deposit. Okay, so you're going to have to save up or gather a deposit somewhere, which maybe we can get onto later on. But let's assume you've got that deposit, okay, or you are actively saving towards that deposit. Whether you are 6 months, 12 months, 2 year or 3 year away from buying a home, it's never too early to have a chat with a mortgage advisor. Reason being, having just an initial basic call to run through how much you earn, what debt you have, what your credit history looks like. Do you have children? In an ideal world, what sort of property are you looking to buy in terms of price? That will allow you to lay out what's possible, maybe right now. What can you achieve right now? Or what can you achieve in 2 years' time? Depending on when it is you are looking to buy a house, what changes need to be made, or what do you need to do to ensure that success? So what you're doing when you're booking an initial telephone call, which as I say can be as early as you like with a mortgage advisor, you're just laying some solid foundations so that when you do get within 6 months or a year, it's not sort of guesswork. You know where you are, you know what you need to achieve, or you know what you need to change, and that will allow you to get there, hopefully removing as many hurdles as possible.
Saving a deposit is going to be one of the biggest chunks of money that most people are going to have to save up in their lives, just because of how expensive houses are. Are there any things that people can do to make saving up a deposit easier?
Yes. So the big one is always the lifetime ISA. Okay, so the lifetime ISA is an incredible opportunity for most first-time buyers. The lifetime ISA is essentially just a savings account that allows you to put in up to £4,000 annually. Okay, you don't need to do the full £4,000, but if you can, fantastic. The government will then contribute 25% bonus on top of that. Therefore, if you put £4,000 in a year, you're going to get a £1,000 bonus from the government towards your deposit. It's essentially £1,000 free money. There's not really many other opportunities like it out there to gather that money. So now to be balanced, or to give you some considerations, so that is a fantastic opportunity. If you do save year on year, you can really do well out of it, and it's going to leave you in a great position potentially. But you can only benefit from that lifetime ISA 12 months after you've made your first payment. So if you're looking to buy a house next week or within the next 12 months, then it's probably not for you if you don't have one open yet. Okay. On top of that, you can only benefit from the lifetime ISA for properties up to £450,000. Now, with first-time buyers, reality is that's going to cover most first-time buyers. However, if you are looking to buy a property over £450,000, again, it's maybe not for you.
And there's a withdrawal penalty.
Yes.
If you try to take the money out to not buy a property, right?
Correct. Either to not buy a property or not to buy a property that is suitable. Okay, so if you buy a property worth £600,000, you're not meeting the criteria for the scheme. So yes, there is a withdrawal penalty, so that's 25%. If you're not withdrawing for one of the reasons you can use the scheme for. And that can end up with you then having less money than you put in. So you've got to be aware of both sides of it. Speak to an advisor and consider these things. Speak to, the bank or whoever it is you're getting the lifetime ISA from. Make sure you understand the terms and conditions and where it's going to leave you in the end.
Yeah. So, so £4,000 per tax year, 25% bonus, so maximum £1,000 bonus for a property up until £450,000. But if you take it out, not to buy that property or until age 60, then there's a withdrawal penalty, which means that you get back slightly less than what you put in. Correct. Got it. Then you mentioned credit scores. Credit scores can be quite confusing. You have more than one, for example. What sorts of things can people do to improve their credit score so that they can increase their chances of getting a mortgage? Okay,
so the biggest thing people can do to look after their credit score or credit report or credit history for buying a home is just to look after it from the very start. If you don't have any adverse credit or miss any payments or make any mistakes from the very start, or you don't rack up, a huge amount of debt compared to your income, you don't really need to do a lot in reality to have a sufficient credit score. That's something that maybe doesn't get mentioned. Look after your credit score from the very start. Take your debt seriously, make sure you're making those regular payments on time, and consider how much debt you're taking out. There's nothing wrong with debt. I have debt, people have debt. We need to consider our debt to income ratio.
I've heard that buy now, pay later can hinder your chances of getting on the property ladder. Is that true?
So things such as Klarna, for example, Klarna will now be reported by the credit report providers. Okay, so if you are now missing payments on a Klarna account, for example, that will be a missed payment showing within your credit report. Now, this has only been happening, I can't remember the exact date, but the
June
last couple of years.
2022,
yeah. So the last couple of years. Before that, Klarna wouldn't have been on your credit report. Now it is, so if you are using Klarna, just respect it, take it seriously, and make sure you are repaying what you are meant to be.
Okay, so we've covered the deposit, we've covered the credit score.
Yeah.
But then you've got the overall price of the house, which, as we've said, is quite a lot.
Mm-hmm.
So what schemes are there to help make getting on the property ladder more easy for people?
Yeah, so there are schemes out there to help first-time buyers, schemes such as shared ownership, first home scheme. There's sort of council-led market value discount schemes. Now, what I would say is for these schemes, again, they're a fantastic opportunity for people who need them, but they are there for people who need them. They're not sort of a cheat code to buying a home. They are there for people who need them. So first of all, have a chat with an advisor, find out if it's suitable for you or if you have opportunities without a scheme. Schemes such as shared ownership. So the shared ownership scheme is a scheme that allows you to buy part of a property, okay? Depending on the housing association, typically, or it can be somewhere between 25% or 75% of the amount of the percentage of the house that you can buy. It can be less than 25%, it can be more than 75%. But yes, you buy a portion of the house, okay? You then pay your mortgage for your portion, okay? And you need a 5% deposit as a minimum for your portion. You will then pay rent on the remainder. Now, the benefit of this scheme is that you maybe cannot mortgage 100% of that property, but you can mortgage 50% of it. So it's allowing you to buy part of the property with the aim of then hopefully staircasing in the future, so buying more shares in the future and working up to owning 100%. Now, if you are looking at shared ownership properties, then you need to, it's really important that you do understand the terms because, depending on, again, who you're buying from, certain terms may be in place, such as you can only staircase 3 times. So you can't buy more of a share necessarily every year for 25 years. Up to, sometimes maybe you can staircase 3 times, and sometimes there may be a cap on how much you can staircase to. So maybe you can't actually ever buy 100% of it. This is the case with some shared ownership. You need to be aware of that.
Okay.
Because some housing associations want them to remain affordable homes. So for shared ownership buyers in the future. So that's shared ownership. Plenty to consider. You need to speak to an advisor and make sure you fully understand the pros and the cons. First home scheme or market value discount schemes. This is a lesser known scheme. It's actually a scheme that I prefer. Essentially, you would typically buy a property. It's 30% discount of the market value. Okay, so it's saving you having to mortgage that extra 30%. Okay, so you're removing that hurdle. You will then own 100% of the property, which is a benefit in my opinion. Okay, I typically like that scheme. With any of these schemes, you've got to consider that if you do use the scheme, you're then potentially selling to a smaller pool of buyers. So a smaller pool of buyers who also are looking to access the scheme because not everybody is. So these schemes are out there and they're great for the right people. But in my experience, I often speak to people who come to me and say, I've seen shared ownership advertised, I've seen the first home scheme advertised, I'm really interested. Sometimes they end up making a standard purchase because there are benefits, to making a standard purchase.
So in your capacity as a mortgage broker, even though there are all these schemes available, Where can people find them, by the way? Just by searching online?
So searching online to find out what sort of shared ownership schemes are available in your local area, and getting in touch with your local council to see if they've got any market value discount properties. If you see a new build estate going up in your area, getting in touch with the builder. Will there be any shared ownership properties on this estate? If there's already maybe a new build, a recently newly built estate in your area, are there? Which of these properties are shared ownership? Do you know if any are going up for sale in the near future?
But in your capacity as a mortgage broker, you'll actually advise on the type of scheme which is best.
Yes. Yeah. So typically most often somebody will come to me and say, right, Dan, I've seen these properties on this shared ownership scheme. Okay. I will then make them aware of what it would take to buy that property. Okay, so how much of a mortgage they can get, what the mortgage would look like, what deposit they need, and also what the rental payment will be on top of that. We can then decide if that's suitable or if there's another avenue that we can go down. But yes, I will advise and give a balanced view on how we're going to proceed.
I've got one more credit score question for you. So the credit system in this country largely relies on the use of debt. So the borrowing of money and then the paying of it back in a timely fashion. And I often speak to people who are like, well, look, I'm paying my rent every month. Why can't that be used to increase my credit score? But there are some services that let you report your rent payments to improve your credit rating, don't they?
So there is that is correct. I'm not sure how exactly you can arrange that, but that is something that I know that a lot of people are doing at the moment. That can only help to boost your score. Maybe to dive in a little bit deeper on the credit scoring. So mortgage providers actually aren't too interested in the score or the score that you're going to see on Experian, Equifax or TransUnion. Mortgage providers will generally use one credit report provider. So one lender will use Equifax, the other will use Experian. Okay. They want to see, how many missed payments you've made in the last 2 years, how many in the last 6 years. Do you have defaults on the account? What are the value of the defaults? Are they satisfied? Do you have any CCJs? What are the value of those? Do you have anything worse? Okay. And each lender will have their own credit criteria. So it will differ from lender to lender. A lender will then run their check and then use their own scoring system. Okay, so if you do have adverse credit or you've had issues in the past, just because you don't meet the criteria of one lender doesn't mean that you won't meet the criteria of the other.
Got you.
So that's my job. So if somebody comes to me with adverse credit, or they say, Dan, I've made some mistakes in the past, maybe my credit file is a bit of a mess, I then say, right, send it over to me with the rest of your documents. I will then look at that and be able to advise on which lender we are going to. Generally speaking, I would recommend a Check My File credit report. Reason being, Check My File is a multi-report provider. So it'll include Equifax, Experian, and TransUnion. Each of those three will actually hold different information about you. So some accounts might be missing on Equifax, but included on Experian. So I can look at that and then say, right, for this reason, this lender uses Equifax. We might meet their criteria because of X, Y, and Z. So just because you've got bad credit doesn't mean that you can't get a mortgage, but it's my job to make sure that we are proceeding on an advised basis, because you don't just want to be applying here, there, and everywhere, trying your luck and getting declines. That's not going to help anybody.
Okay, cool. Can single people actually afford to get on the property ladder themselves, or do you need to be in a couple or have rich parents?
So I do help single people to buy homes. However, if you are in a couple and as a couple you both have an income, you have your credit file's okay, it's going to help a lot. It's pretty much going to double your capacity for a mortgage depending on income. So if you are in a couple, it's definitely a lot easier. Unfortunately, that is the reality. 2 people saving up for a deposit, 2 people contributing to mortgage affordability. Okay, so in a couple, it's going to be easier, unfortunately. Parents who can help certainly helps. Mortgage lenders across the market accept gifted deposits from family members. It's very standard. It happens all of the time. Unfortunately, that's not available to all of us. But if it is, it's going to help. Lenders are happy to accept that. The way that works is lenders just want document signed by the gifter stating, I am the mother of this buyer. I am gifting X amount. I have no financial interest in the property, and this is a gift and not a loan. If that's the case, lenders are generally quite happy to accept it. So if that opportunity is there, it's one worth taking.
Yeah, and the bank of mum and dad, if it was a lender, would be one of the top 10 lenders in the country, wouldn't it?
Exactly. And yet there's so many people who do benefit from it. Especially, if you are struggling to save that deposit, that's going to help a lot.
Okay. Oh, and by the way, the service that lets you report your rent is Credit Ladder.
Yes, that's the one. Yes, it escaped me when you asked.
Saved up the deposit. Credit rating is looking okay.
Yeah.
You've decided on the scheme you want to go with. You've decided on the location you want to buy. How does the mortgage application process actually work?
Okay, so we will have that initial conversation. As mentioned, run through circumstances, goals, how it is I can help. I always advise my home buyers in that initial conversation, ask as many questions as you would like. It's important to me that my home buyers leave feeling maybe educated and just more comfortable with where they stand. After that call, they will then provide me with their documentation, payslips, ID, proof of address, credit report, bank statements. I will then build their file, complete some initial research of the market. We will then have a follow-up telephone call and look to get an agreement in principle from the lender. Okay, so an agreement in principle is essentially a check that a lender runs. It includes a credit check, and it states that we as a lender would consider lending to you X amount. Okay, now if a mortgage advisor gives you one of those, it's because they are confident that you can borrow that amount of money. Okay, a mortgage advisor should have done things properly, and if so, they will be confident you can get that mortgage loan. Therefore, once you've got that, you can then start to plan, right? I know what properties are realistic. I know what mortgage amount is realistic. And then you can get out on the house hunt with full confidence. Now, something to add in there is that just because maybe you can borrow a certain amount doesn't always mean that you should, because you need to be able to afford it on a monthly basis. But again, you'll chat through that with your advisor. But yeah, you're on the house hunt. Probably the most fun part of the journey. You're designing, you're decorating the house in your head, you're viewing properties, you're on Rightmove every night in bed. You find the one, let's say you make an offer and that offer is accepted. It's not always that straightforward, but let's say it is. If that offer is then accepted, you will then come back to me or your advisor and say, Dan, we've had this offer accepted on this property, we're ready to go ahead. At that time, we'll have a further catch up, okay? And we'll speak through the specifics of moving forward. So this is the lender that I recommend for X, Y, and Z reasons. This is the cost. Do you agree with that? It's important that the home buyer understands that, and then you can move towards your full mortgage application. A mortgage application is specific to the property that you're buying. Okay, so that will only come after you found a property. Okay, so we'll agree on the most suitable mortgage solution. At that point, you will have instructed a solicitor, because a mortgage application requires the information from your solicitor. You want to know who you're working with. Okay, submit that mortgage application. If an advisor submits that, most of the time, subject to a property valuation, that should be accepted. Okay, and yeah, in the current market, you should go from application to mortgage offer in less than 2 weeks.
Okay.
Once you've got your mortgage offer, fantastic, congratulations. At that time, you will also be discussing insurances and things like that with your advisor. But once you've got your offer, you then work with your solicitor towards completion.
How do you find a solicitor? That was going to be my next question. How do you find a good solicitor?
Okay, so you can either just look locally. Okay, you can look online. These are the options. I always recommend that you take a recommendation from somebody who you trust. Okay, so I will always recommend a solicitor to my clients. Okay, now, you may get recommendations from different parties, okay? But if you are taking a recommendation, you need to know that the person recommending a solicitor can explain. I always say, the solicitor who I recommend, who I work with, there's one lady who looks after my home buyers. She looks after all of my home buyers. I've got a direct line of contact with her. I've got a relationship with her. Okay. And that can sort of streamline the process. And I know she's got history in looking after the sort of, this sort of buyer. Okay. So if you are taking a recommendation, make sure it's not just they're recommending anybody. The solicitor has worked with people like you before. You understand how they communicate. Do they communicate well? How responsive are they? That you know the individual who's going to be looking after your case. That's important, rather than just, sometimes if you work with a huge corporate company, sometimes you may not have that relationship with a solicitor, which I think is important because it's the biggest financial transaction of your life, especially if you're a first-time buyer. You're going to be nervous, you're going to be anxious, you're going to want to ask questions. And if you are asking questions, in my opinion, you should be able to ask those and get a response within a good time frame.
So perhaps not perfectly analogous, but it sounds like the same sorts of considerations one might have for finding a driving instructor, say.
Absolutely.
An individual that you trust.
Yes.
That maybe someone else has used.
Yes.
That they've had a good experience with and so on.
Yeah, and to maybe defend solicitors, because solicitors sometimes get a bit of a hard time in the home buying process, because that is the part of the process that takes the longest period of time. It's maybe the most frustrating for a buyer. It's maybe the part that the buyer maybe understands the least. Property searches, the transaction of funds, etc. But yeah, your solicitors on your team, they are working towards you completing on the purchase. So yeah, get a good solicitor on side.
Cool. What comes next?
So your solicitor will complete all of the legal work associated with buying a home. Do you want me to touch on insurances?
Yes, please.
Yes. Okay. So what I like to do with my home buyers is before we get your mortgage offer, I like to have all of your insurances tied up. So you've got your mortgage offer and you know what you're doing with your insurance. Therefore, once you get your offer, you don't have to work with me anymore and you're just working with your solicitor moving forward. So your mortgage advisor will most likely also advise on your protection. Okay. So life insurance, critical illness, income protection. Okay. Now these are not compulsory. They are optional. However, they are advisable in some form for most buyers. Okay, depending on your budget, what cover you already have, your circumstances, do you have children, things like that. But I would always, it's my job not just to make sure my clients can get the debt and buy the home, but also to make sure that they are protected if, maybe there's a death in a couple or if there's an injury or an illness that takes away their income, they need to be protected to make sure that they can stay in the home. Personal protection is optional, but advisable. But you do need buildings cover in order to complete the purchase of a home. That's compulsory. So generally speaking, we will have those discussions by the time you get your mortgage offer. Then your solicitor will carry out all of the legal work associated with buying a home. And that takes you up towards exchange of contracts and completion.
Yeah, and the thing with taking out something like life insurance when you buy a home, as you said, should the worst happen and one of the people in the couple was to pass away, the surviving person would get a payout equivalent to the amount remaining on the mortgage, in what's called term reducing life insurance. Yeah,
so I would always recommend as a minimum, even regardless of what other cover you have elsewhere through employers, as a minimum, a decreasing term insurance policy, which is joint. So that cover amount will decrease in line with your mortgage balance, and that pays out on the first event of death during the policy. So if you're in a couple and one of you were to die, it would clear the mortgage balance, leaving the surviving person, in theory, with a mortgage-free home.
I heard different. So term decreasing life insurance, yes. But my understanding is that the best way to go about it is to do two single policies, both written into trust, so that the payout to the opposite party can be quicker, not joint.
So generally speaking, whether you get it into trust, that's maybe a separate issue. But so what I mentioned was as a minimum. What you're going to do as a minimum, the cheapest form of that cover is a joint life first event policy. Yeah. That's a minimum. You need that. The reason being, that's because it's joint instead of two individual policies, it only pays out once. Therefore, it's typically going to be cheaper. And when advising on protection, every policy I recommend or every product I recommend, there needs to be a reason for having it. Okay, so we need to document what the reason is we are advising on this policy to make sure you understand why you're taking the protection. Okay, so if this cover is just to clear the mortgage balance for the surviving person, okay, then the joint life first event policy will typically be sufficient. Okay, because if the other person was to die, the mortgage balance is already cleared. That doesn't mean you won't take any further life insurance out for other reasons, maybe to leave money behind for family, for children, etc. But yeah, as a bare minimum, I would always advise on a joint life first event decreasing term policy to protect your mortgage.
Thank you for clarifying that. So you mentioned exchange of contracts and completion. Could you please explain what exchange of contract means and how it's different to completion?
Yeah, so exchange of contracts will typically occur around about a week before completion. Okay, typically. Exchange of contracts is when you will pay a deposit. Okay, once you've paid a deposit, contracts will be exchanged between parties, and that is the point when your purchase becomes legally binding. So both the seller, it's legally binding for both the seller and the buyer. So that's the point where you can't just pull out without any consequences. Okay, so if you were to pull out, you might lose that deposit. Okay, before the exchange of contracts, you can pull out, and there's not necessarily going to be any consequences. So exchange of contracts, it becomes legally binding. I am buying this house, you are selling that house, and we are going to complete maybe next week. Okay, so yeah, completion is simply when the purchase completes. That is when you get your legal ownership of the property. That's when you get your keys. That's when you walk through the door.
Okay. So completion's like the process is complete.
Yes, that's the end of the road. That's when it's your house. You can get in there. Yeah.
Something that can happen to people during the valuation process of the house, I don't think a lot of people realize, is you might have spoken to the people you're buying from or to an estate agent, and then there'll be a market valuation of the property. But then when you come to actually get the mortgage, the bank can decide, hold on, we actually think the property is less, so we're going to lend you less than what the market value of the property is worth. Can you speak a little bit about that?
Yeah, absolutely. So as part of your mortgage application, the mortgage lender will complete a basic valuation of the property. Essentially, they are valuing the property for their use, okay, for their use only, so that they know if they are lending you X amount on the mortgage, okay, the property is worth what you've said it's worth, okay. Now, what can occur is that the lender might find the property to be worth less than what you've agreed to pay for it, okay? If that does happen, so it's a down valuation.
Why might they down value a property?
Different opinion. They might simply just think that the property isn't worth what you think it's worth and what you've agreed to pay for it. It's essentially just a different valuer going in, a different man or woman going in, making a decision. It's that simple. It's just a different person's opinion on the value of the property. Okay. Now, if they do downvalue the property, there are a few options that you have. Okay. So if they come back and say, right, we don't agree with the value, therefore we will lend you less money, you've got a few choices. You can appeal that valuation. However, it's difficult to get a successful appeal with mortgage lenders, okay? They typically want something like 3 properties in the immediate area which have sold in the last 6 months, which will then allow you to sort of make your claim for why the down valuation was incorrect. All mortgage advisors will tell you you're set up to fail with an appeal, okay? Unfortunately, you can be successful, but it's difficult. So yeah, if that's the case, you have different options. You can either think, right, you know what, they valued it less, I no longer want to pay this amount. So you can either walk away from the purchase, or you can renegotiate the purchase price, okay, with the seller and say, you know what, this value, I actually think it's worth less. Can we renegotiate? Or you can make up the money elsewhere. So, for example, the purchase price may remain the same. The lender's valuation might come down. Therefore, their loan amount might come down. You could contribute the extra as extra deposit. However, reality is that's not always too easy.
Are there any additional or hidden costs that people should be aware of when purchasing a property? I'm thinking, for example, about things like stamp duty.
Yeah, so stamp duty land tax is essentially a tax that people will pay on the purchase of property and land. So for first-time buyers, there is something called stamp duty relief. Okay, so you have stamp duty relief up to £425,000. Okay, so if you buy a property up to £425,000, you won't pay stamp duty on that. Okay, that's fantastic for first-time buyers. If you're not a first-time buyer, the stamp duty threshold goes up to £250,000, so you won't pay it on properties worth less than that. Okay, so yeah, if you are buying a property above either of those thresholds, depending on your circumstances, you need to understand what or how much stamp duty you're going to be paying. Okay, to work that out, one, your solicitor will do it for you, okay, when they provide a quotation. But if you're a little bit earlier in the process than that and you want to just get an idea, Google a good 2024 stamp duty calculator. Make sure it is 2024 because those thresholds changed in the last few years. And that will give you a good idea of how much you've got to pay.
Nailed it. Any other hidden costs?
So not necessarily hidden, but costs to be considered. So mortgage advisor fees. This depends on the advisor you work with. This depends on what your circumstances are, what your goals are, how complex it is, any specialist needs. Typically anywhere between £0 and £1,000. Okay. Solicitor fees, again, depends on the solicitor, the property value that you're buying, any quirky areas of the property. Things such as gifted deposit, leasehold properties will come with extra costs. Solicitor fees, anywhere between, let's say, the cheapest end, £1,250 to £2,250 for a purchase, hopefully. Okay. On top of that, you may choose to get a property survey. I would always advise a property survey. These are optional. Property survey, that's going to cost you somewhere between £500 and £700. Give or take a little bit. But yeah, those are the costs that you need to be aware of.
Okay, thank you. Because where I was getting at with that question is, you're like, oh, save my deposit. But then there's like a few grand more. Yeah,
just to jump in there, there's also another potential cost of which is some mortgage products will have lender arrangement fees. Not all products have them. They are avoidable if circumstances allow and if your goals allow. Or if that is a preference. But sometimes lender products can have arrangement fees, typically on a residential mortgage, up to £999. But an advisor will always explain this to you.
Okay, so that's the home buying process covered quite comprehensively as well. So thank you very much. I just had some other questions for you just to get your opinion on the home buying as a process and things that can be done. So what I'm interested to know from you, Dan, is a house a good investment? Or is it simply a purchase that you make out of emotion or really wanting to live somewhere?
So if we are talking about buying a residential property, so a house for you to live in, so for a home, yes, it can be a good investment. You know, it's not guaranteed, but yes, it can be a good investment. What I would say is that when you are buying a home to live in, it's not simply an investment. Yes, you do need to consider it as an investment. Is this property going to drop in value in the next few years for any reason? You know, maybe because of the area, other things, you know, locally, the types of businesses around, or issues with the property itself. You do have to consider those things, absolutely. But it's also, you're buying a home, a roof over your head, a roof over your kid's head, a safe space, a secure space, a space to, you know, watch, you know, your television, be with your partner, whatever it might be. So yes, buying a home absolutely can be a good investment. Yeah, it's not just an investment when you're buying somewhere to live.
And why do you think we prioritize buying a property so much in this country? Yeah. You know, when you think about Europe, for example, renting seems to be the norm, but here, buying a property is like a key milestone for a lot of people.
I think as Brits, culturally, we value security, and I think we always have done, whether that be people, you know, British holiday makers going at the same holiday destination every year because they've been and they know the waiter and they're comfortable with the hotel, or, you know, a restaurant recommendation, going to the same local restaurant, whatever it might be. I think culturally we value security, and most people do value security, and knowing they've got a roof over maybe the children's head in the future that they own and that they're going to leave something behind as an asset. I think that's the reason. I think it's a cultural thing. And I think, we value our thought or our interpretation of safety or security.
I agree with that. And I think that if renting was more viable, then I think maybe some of the pressure on buying a home would lessen.
Yeah.
Because most of my renting experiences have been absolutely terrible.
Yeah.
And you in no way feel like you're being provided a service. It's almost like you're paying them half your salary every month.
Yeah.
But it's like you're not the customer. It's almost like they're doing you a favor by letting you pay them all that money. And, I lived in a property once that was so moldy that my shoes became moldy.
Yeah.
My shoes.
Not what you want.
Yeah. Just by sitting there on the floor.
Terrible.
And I emailed them and they were like, yeah, just open the windows. It's like, are you joking? And that same experience, I was served a Section 21 notice, given 2 months to move out once I fell out of my 1 year contract. So when you are trying to do something like start a family or just live in the same place so you can go to work every day, it becomes really tricky when you feel like, oh, well, I could just be asked to move out of this house, or I don't even know if my belongings are going to be safe and so on. So I completely agree with you there on the security point.
Yeah.
What's your opinion on landlords?
I think landlords, like everything, there can be good landlords and bad landlords. A lot of people do have bad rental experiences, but some people do have good ones. Opinion on landlords, it's difficult to say, to be honest, because I think it is a business at the end of the day. And obviously we'll speak about landlords sort of en masse, but a lot of the time a landlord is earning money for his family. So it's a difficult one to say, but I think there should be maybe some more regulations put in place to look after the tenant, to make sure it's not going to be, the rent is not suddenly going to go through the roof, which is something that we know can happen. Some further regulations to look after the tenant, absolutely, but I do think it's a difficult one to answer, to give a simple answer for.
I think you were quite balanced, to be fair.
Yeah.
For people who are renting, because we know about a third of the British population rents, what sorts of things can they do to rent well? Because you're going to have to rent. You have property buying kind of on your mind for the future, but what can you do to rent well in the present moment?
It's in the current climate, I think it's getting more difficult because of the fact that rental agreements are going up in cost. But it's just important to understand the same with buying a home. With buying a home, you would always understand the area that you're going to move to. You would maybe understand who the neighbours are and things like that. I think you need to put some real research into, who the landlord is, maybe other tenants that they have, similar properties, other properties that they have if possible, the local area, what else is around the local area. You may not want to buy above a kebab shop. Do you know what I mean? Because that can impact your experience in your property. Just make sure, as you would when you're buying a home, it's the same thing. Plenty of viewings, understand the quality of the property. As you mentioned, you don't want to end up in a circumstance like your own, and just don't rush into it. It really is similar to buying in terms of don't rush. Make sure you're making a fully informed decision before you sign up for 12 months or 24 months or whatever it might be.
And something that I know, because I've recently done this, is that when you're coming to the end of your assured short hold tenancy, your AST, if they try and put the price up, you don't have to accept that price. You can actually negotiate the price down because they can't put it up by much more than surrounding properties in the area. So always negotiate. I've also found that my more positive renting experiences have come from not Wales, just a solo kind of landlord operator, although those people can be okay, but where there's been almost like a building manager, where it's more of a company that's a landlord, because there'll be a team that you can email, there'll be a phone number you can call if your toilet breaks, if the lights don't work, they'll have a team of people on hand that they can call to come and help. And
maybe make sure that you understand what the agreement is or what the terms are in terms of maintenance. If something does break, what is the agreement? How long is that going to take to get fixed? How much do you have to contribute, if anything? what are those details, because things can go wrong with properties, especially a property that maybe you're new to and you don't understand the history of.
Almost at the end of the conversation, Dan, thank you for the comprehensive whistle-stop tour. I think what we've spoken about today is going to help a lot of people. Before we ask you the question that we ask everyone, are there any final points that you want to make about buying a property? Any key things that you think people should know? Preparation
is key. It's never too early to prepare and to leave yourself in the most solid position possible for when your time comes. Even if you're not planning on buying, or you don't have a date set or a year set for buying, just looking after your credit, understanding, what your income will allow you to achieve, maybe what you need to increase your income to in the future. Preparation, look after your credit file. As I've mentioned before, that I see credit reports every day for my home buyers. I would say 50% of people don't really understand what's on the credit report or don't know what's on the credit report. Sometimes people think they do, but once I get it, it's quite often different. And of those, those credit reports, I would say that 50% of those have some form of bad credit. Many people have bad credit from years ago, whether it's on a telephone agreement, and they maybe don't think too much of it at the time because it's just a phone bill.
If you're in a relationship with someone and you have a joint account with them, your credit histories are linked, aren't they?
Exactly, yeah. So you'll have financial associations, which could be a partner. Sometimes it could be a ex-university flatmate if you've got a sofa on finance together. It's important to be aware of that and just download a credit report as soon as possible. Check My File, I would recommend. Just have a look at it, try and understand it. Is there anything wrong? Is it great? If it is great, keep it up, fantastic. And move forward safe in that knowledge.
Thanks so much, Dan. So the question we like to ask everyone is, what's the best piece of money advice you've ever received? Who shared it with you and what did you learn?
Best piece of money advice I have ever received. So it's, I might have to think about this one. I would say my mum, made me quite cautious financially. My mum, when we grew up, my mum's one of those people who, it took her a while to feel comfortable buying things online, trusting things like that. And when I was younger, my mum never used to let me have a debit card. I never had a debit card until I was maybe 16, 17 for my bank account. So if I wanted money from my bank, I used to have to get the bus to the bank, withdraw my money, and then, so it was sort of hard work to get the money. I mean, mum always made me very cautious with money. And I think that's a good thing in the early years of having money. I think it's good to be cautious. Maybe not to take unnecessary risks, or to, it's so easy these days to take out credit cards and to take on new debt. You're getting letters through the post, every day telling you, you've got access to this debt. I was very cautious financially in my early years of adulthood. And I think that's left me in a good position. And then once you maybe get to this stage, your mid-20s or your 30s, as I am now, then you can start maybe looking, once you've got that solid base, right, do I want to invest? What do I want to do? But it's important, those cautious early years, which I got from my mum, have now allowed me to do that.
It's an interesting take. Not necessarily one I disagree with, but there's a lot of stuff, particularly online, about when you're young, that's when you should take a risk. That's when you can make mistakes and stuff. But you're saying more, no, build a solid foundation. Once you have that foundation, then you can make further decisions.
Yes, and maybe, the type of risk, we need to define what risk is or what it is we're talking about. What I was talking about was simply, not taking out credit card debt that I necessarily don't need when I turn 18. Things such as that. When I turn 18, you don't need to suddenly start getting an incredibly expensive car on finance. Those sorts of things. Everything was well within budget for the early years of adulthood. So that's sort of what I meant in terms of risk.
Awesome. Thanks so much for today's conversation, Dan. Really enjoyed it. Really learn a lot whenever I hear you speak, whenever I talk to you. For people who want to find you, for people who might want to use your services as a mortgage broker, where can they find you? So
my main page is Instagram, which is at dandoesmortgages_. My tag is Dan Does Mortgages across all of the social media. Dan Knott on LinkedIn. And hopefully there's plenty of useful information on those pages, mainly the Instagram. If anybody does want to have a chat, I'm always readily available for a conversation.
Awesome. And that's Dan Knott, Knott. Dan, thank you so much for coming on.
Thank you very much for having me.
Hello everyone. Thank you very much for watching this week's episode of the Mr MoneyJar Show. If you enjoyed it, then please do subscribe, as it helps out the show a lot and enables us to continue running. Anyway, we'll be back next week with another special guest. I've been your host, Timmy Merriman Johnson.